Good morning, viewers, and welcome to this edition of the Market Review, where we bring you developments in the financial and capital market as relates to the economy. Today is Tuesday, November 17, 2020, where we take time to look at the bonds and fixed income market. We need to discuss around how private sector can be encouraged and improve their participation in the Nigerian debt market. Is Mr. Ola Olabinjo, CEO Skystone Capital. Nice to have you once again on the show.
Good morning. Nice to hear my thoughts.
Yes, nice to have you again for the second time this year.
Let's first begin with the issues of bond issuance. We know that private sector needs to leverage the market because of the opportunities that are there. And 2020 has shown a lot of activities in that regard. Prior to now, it used to be a crowding out by governments dominating the bond issuance space. But this year, we've seen some activities from the private sector. Can you give us a perspective on how this has evolved so far?
So, if you look at, go back and look at 2009, 2000, when it was bullish, there was a lot of euphoria. GT came with 200 billion, and a few other banks came in there. And look, it was a very good way for banks to deleverage and rematch the maturities on their books. But come forward so after then, you see subnationals and subnationals going in there, crowding out the private sector from the bond market and in Nigeria. And it was good. If you look at Lagos State, the various series of issues done by Lagos State was well oversubscribed, and they were put to good use. So if you look at, people tend to forget. If you look at Lagos State, they were put to what they were actually said they were going to use the bonds for. Adeola Odepo Road. People forget that those bonds were actually used at some point in time to develop major infrastructure that we enjoy and seems to have forgotten in Lagos State today. And then go back, oversubscribe, reissue. But really, if you in an economy like ours, what should really happen for deepening of the market and growth of the real sector is for the private sector to be able to access the debt capital market, particularly the bonds market, which gives you stability in planning, and the tenor is a bit elongated. And it can also have a fixed cost to the funding of planning your growth over time. 2020 has been a mixed bag for us. At the early part, we saw some very interesting approach to the market, and then there were you see both institutions, private sector, Dangote came in there, and you also see Primero, the BLT guys also coming into the market to raise money. It's quite unfortunate what happened with the BLT in Lagos. We'll get that further down as to how some things affect confidence in the market and how we need to ensure that protect the market when it comes to things like that. But it's been a very good year, and there are reasons why the market suddenly resurged. If you could trace it back to December 2019, when the central bank did a bit of segmentation in the fixed income market by allowing those accounts participate in the DMO, in OMO operations, as well as in the Nigerian Treasury market. And as you begin to have maturities in the DMO market, there was a lot of liquidity chasing Nigerian Treasury market, and then that forced down pricing to an all-time liquidity cost reduction across all the markets, all the money markets, and it was a veritable opportunity for corporates to go and reprice them, both the medium to long-term costs at a very good price. I think that's one of the reasons why we saw that resurgence in market early this year.
Now, let's look at the commercial paper space. It's been a very interesting area. We've seen Mixter, we've seen Guinness, we've also seen Cardinal Stone leverage the space of the market. It shows a lot of prospects and opportunities, and other companies are really coming on board. I expect to see more activities even as the year rounds up, but just tell us how this space in the market has been leveraged and the opportunities that are there for the private sector to latch onto.
we hope that, you see, look, we have close to about 4 trillion in maturities that's going to come into that market in terms of liquidity, both from the subnational, the treasury market, and so on. And towards the year end, and while companies are going to be very smart companies with good treasuries are going to be planning against next year. I'm sure a lot of them will want to lock up on the very interesting rates that we're seeing now in that market. So don't be surprised at some of the feelers that we're hearing from the treasurers in the market. There are a couple of registrations that is going on both the FMDQ and the NSC that we might be laterally. And usually, typically, if you look at the structure of that market, December is a period of high activity for the bond and the CP market.
Now, in these times, globally and in Nigeria, private companies are going through a challenging phase. The COVID-19 pandemic hit the entire globe. Sectors like aviation, oil and gas services have been affected, and the place of liquidity and financing is very critical. Now, take us how the private sector can really leverage the debt market and ensure that they can raise that required capital, maintain their operations, and achieve sustainability in this challenging time.
The key thing we should be discussing in this country is how to deepen that market and also ensure that regulation is further tightened. So for you to come into that market, your rating has to be right, your governance process has to be right, and so on and so forth. But I would expect that by now, and quite fantastic work that FMDQ is doing, and the NSC is also trying to strengthen their own process as well to bring, is just to be able to ensure that you have the first class A rating, B rating companies, just like you have in America where you have junk bonds, you have semi-junks and so on in terms of rating. You must find a way to ensure that the not so A rating companies should also be able to have access to that market, but while also ensuring that you protect the overall credibility of the market in terms of maturity payment and also as when they mature. So look, historically in Nigeria, the balance sheet funding and then expansion funding has been done by straight debt from commercial banks. And if you look at the history of both CPs and bond markets, it's the regular names that we've known even 20 years ago, 15 years ago. You have the flour mills, you have the UPDC, you have the Chelerans, and so on, who are really the kind of semi-corporates. Now you have Dangote coming back into the market, regularly repricing, taking the short end, using CPs and so on. I think we need to rethink how we approach funding. And that's why you've seen that in terms of cost of funding for development of the macroeconomy as a whole, banks' balance sheet alone cannot do it. And most local treasurers, in terms of their experience, is actually limited to approaching commercial and merchant banks to fund both expansion, project, and then working capital. I mean, you look at a very young company, Vital. They've done well. They approached the market in the power sector. And the newer company to approach the market sometimes, I think it's Andover, I support over. They've done some very good. And when they wanted to do CapEx, NACO also approached the market, if you remember, and they were able to do for their cargo handling equipment. It shows the quality of treasuries. And now, what a lot of corporates need to begin to understand is that in your C-suite, your treasury sense, your treasury experience, very, very key to accessing the right amount, the right type of funding for your growth, for your expansion, and for your working capital. And I think the debt capital market is one area that we have underexploited in the real sector of the Nigerian economy. But the good thing and the good news for maybe the CBN apparently didn't know that they had done the country a lot of good in this area. That recalibration that was done in December of last year is bringing a lot of people are now hunting for bargaining in terms of yield and spread in terms of in that market. While I would also caution not to compromise on quality, there's a lot of cash out there. And by the end of this year, you have between 3 to 3.5 billion liquidity entering into that particular, either for CP or bond, looking for where to get the right yield. And of course, we know that some of the activities that the equities market is driven by the bargain hunters as well as that. We'll get to that later on in the discussion. But the point I'm trying to make is that it's good time for companies that are well structured, that have the right ratings to approach the market to reprice their medium to long-term costs on their balance sheet. This will also be a kind of cushioning effect for the headwinds that we have seen for COVID and the entire protest from them in terms of overall costs of the balance sheet.
I agree with you, Mr. Ola Olabinjo. You put it right that the commercial paper space, the debt market has been underexploited and it needs to be fully leveraged. But the place of regulation and policy is very important at this point. What would you be saying to a regulatory space and policy steps to encourage companies to come on board and participate in the markets?
What's the trend over the years? You would see that central bank has been very, very historically, CPs were basically used by banks and corporates to manage their end and manage, not really for developmental purposes. And then you find the central bank paying very good attention to the use of CPs in the last 15 to 10 years and so on, before the resurgence of the CP market, I think about 3-4 years ago, and we're seeing activities in that regard. That shows the bit of regulation and they're paying attention to it. But with the emergence of FMDQ, the processes of listing on that platform that they have is also well thought out, and kudos should go to FMDQ for the great job that they have done in that particular work. And then you're also seeing the NSC also coming up, and I know that they're working on further regulation. And the overall framework of that market is tight, is of international standard. I can tell you, I know the process of getting listed on that market. I mean, you've had GCL, you have goes to rating most of the bonds and listings in that market. And I think it's one area of the financial sector that we should be proud of what has been done there as Nigerians. And what is left now is to sustain the liquidity in that market and also ensure that a lot of other companies, mid-sized companies, are encouraged to bring governance into their board, into their management, so that they can tap into the opportunity that is available in that particular market. It was unfortunate that most Nigerian businesses do not have the right governance and rating to approach the massive opportunity. It also tells you the overall structure of the financial system. So you have very few investment banking, well-trained investment bankers and capital market operators that can really go to these corporates, analyze what they need, and see how the balance sheet can be restructured. And then these are the kind of advice that the average branch manager of a branch of a bank, or the average head of corporate banking of a Nigerian bank, unlike before, would definitely not be able to do balance sheet analysis to the extent to say, look, let's reprice and bring in this is what you need on your balance. And that's why we're seeing the mortality rate of medium-sized Nigerian companies being very high, because they're using the wrong type of liquidity to fund the expansion and the sustenance. You can get 5 to 7 year money in the debt capital market in Nigeria, and it's available. You can get 3-5 year money. Really, a bank that has 40%, 60-70% of its average maturity in 60-day money, funding 4-year infrastructure development for companies is already dispatched. And that's why you're seeing that the funds is just not there. You want to set up a tomato factory, or you want to set up a farm in Nigeria. If you want to set up a palm farm in Nigeria or expand a palm farm, you need average of 3 years to get the best yield of palm, and then to harvest, set up the processing. That's not a commercial bank loan. You understand? So the structures just have to change. But I'm happy that the various regulators in that sector are beginning to bring skill and knowledge. It's a bit slow, but we're getting there. And I think it's about time that the importance of commercial banks and merchant banks to the overall deepening of the Nigerian macroeconomy, the real sector, needs to be a little bit de-emphasized, and they should go a little bit down market and get the mid-size and the large corporates to begin to see the benefits in the debt capital market.
Mr. Ola Olabinjo, I just want to say that we hope to have you in subsequent edition, particularly as we review the year as it concerns the bonds and fixed income market. So just note that we expect to have you next month as we continue this conversation around developments in the bonds and fixed income market and continue to monitor how the private sector is leveraging the debt markets. Thank you once again for the time, and once again, it's been nice having this very rich conversation with you.
Thank you very much.
That has been Mr. Ola Olabinjo, CEO of Skystone Capital, giving his perspective on how to improve private sector participation in the Nigerian debt market. If you want to get further insights on our analysis today and the market developments in the Nigerian bonds and fixed income space, log on to our website, www.proshareng.com. Go to the right space of the bar, check up, you'll see bonds and fixed income. Click on it and you get all the information, analysis, and reports and latest stories around that space. Also, you can send your comments and views around how the private sector can improve participation in the Nigerian debt market to news@proshareng.com, and we'll be glad to receive them and respond to you appropriately. Also, tag us on Twitter. We are proshareng, at WebTVNG also, and the analyst at the analyst NG for further updates and analysis. Till we come your way again, it's been nice having this conversation with you on the Nigerian financial capital market and how we can make it better for everyone. Hope to have you same time, 10 a.m. tomorrow. To come your way again, thank you for watching. Have a nice day and stay safe.